Hey, Mark Gelman here from Caliber Home Loans, your mortgage advisor. Straight talk about home financing. Today we're going to talk about Michigan property taxes, how and why they change. So property valuations and taxes in Michigan. So Michigan is a little bit different from a lot of other states. So when you own a property in Michigan, there's always two values, the state equalized value and the taxable value. So the state equalized value is kind of like the market value. It's not specific to your house. It's more of the area, the community, that the city figures out what your house is worth. And then the taxable value, when you first build a house, is equal to that amount. So property taxes are based on your local millage rate and apply to the taxable value. Some cities and townships have multiple millage rates based on what school district the property is in. So, for instance, city of Southfield, they've got, I think, 3 different school districts. So, depending on where you are in the city, your taxes will be different based on the same taxable value. So, the state equalized value, the state is the assessed value after adjustments by the county and state equalization. So, again, this is like a market value for your home. The assessed value is equal to 50% of the average selling price or cash value of each property averaged over the past 2 years and based on the condition of the property. It is community specific. The taxable value is based on the SCV in the year of reassessment, which is a year after the property has been acquired, unlike the SCV. So future increases in taxable value of individual parcels of property are limited to the lesser of the rate of inflation or 5% of the previous year's value, not the actual taxes, but the value. The increase is capped. There is no cap on if values go down. So the taxable value, when a property is sold or transferred, the taxable value is reset to equal the state equalized value, which equals half of the property cash value or the assessed value in the year of reassessment, also referred to as uncapping the taxable value. Now, when you first build a home, the city or community or township will set the taxable value and the SCV at the same number. And then from that point on, every year the SCV can change based on market conditions. But again, the taxable value is capped. It can only go up 5% or the rate of inflation, whichever is less. So again, with new construction, depending on the city or township, the SCV and the taxable value will be set at half of the sale price of the home. You'll need to check with the city you're building and to see if they actually follow those rules. Theoretically, in Michigan, everybody's supposed to follow the same rules, but not every community follows them to the letter. So there's also homestead versus non-homestead taxes. When a home is used as a primary residence, homestead millage rates will apply. When a home is used as a vacation or rental property, non-homestead millage rates will apply. Homestead rates are typically lower than non-homestead rates. The difference or spread varies depending on where the property is located and again what the school district is. So what does that mean for a buyer? So let's take for instance, the current owner of a home built the house in 2012 for $200,000. So the city set the SCV and the taxable value, initial taxable value, at $100,000. So I'm going to come along. I want to buy the house, and I'm going to buy it for $370,000 this year. So let's say currently the SCV is $150,000. So maybe the city thinks that the house is only worth $300,000, but the taxable value, because remember it's capped, it can't go up as fast as the SCV, is at $130,000. So the taxes are based, the current taxes for the current owner is based on that $130,000 taxable value. So once I've purchased the home and closed, next year, depending on when in the year I close, but next year the city or township is going to reassess the property. And so next year, let's say the SCV is $170,000. So they're going to uncap the property tax value, raise it to $170,000, and recap it. And so my property taxes will go up the year that the taxes are uncapped, raised, and then recapped. So if you have an escrow account for property taxes, the escrow account will be impacted by the change in your annual property taxes. Tip: before putting in your purchase offer, call the city or township treasurer to determine what your future property taxes may look like. Before putting in your offer, call your loan officer and have him or her run the numbers so you know what your payment, cash investment, and future payment will look like. And then ask for a total cost analysis to determine what options may work best for you. Now, I'm going to note here that when you call the city or township, they're not going to give you a number. They're going to tell you, we don't know. So the best bet is to figure out what they use what math they use when they reassess the property and they raise the property taxes. Some communities actually use half of the purchase price, even on a used home. Most do not. So if you're just looking at an annual increase of the state equalized value, or SEV, sometimes we can just go off, what was the gap in the last couple of years, and apply that to next year, and raise the taxable value to that number, and figure out what we think your property taxes are going to look like. So again, give me a shout. I'm Mark from Caliber Home Loans. I've been doing this for about 29 years. My mission is to deliver an honest, well-communicated, knowledge-based lending experience. And I always tell people, being comfortable in your home begins with being comfortable in your loan. If there's anything I can do for you, please reach out and let me know. I'll answer any question you have. Thanks a lot and have a great day.